Hello, founders. Welcome back to Next Round Ready. I'm your host, Chris. We have Rick Turoczy here. I'm super excited to have another conversation with one of these people who leads accelerators because I think accelerators in the startup world have become super polarizing to some people. And then there's like another half who love them, who just praise them all the time. So I'm excited to connect with you, Rick.
Yeah, I'm excited to be here. Love talking about accelerators, both pros and cons, so I'm happy to get into it.
And let's start there. So for you, what are some of the pros? Because I meet founders who listen to the show who are interested in joining accelerators, but they look at some of the rules and expectations and it kind of turns them off. So for you, what are some of the pros that you would tell that founder?
Yeah, I mean, I think these days, to your point, like accelerator programs are very much like collegiate programs. Like they all have their strengths, they all have their weaknesses. Like if some focus on a particular aspect that are interesting to a founder, then that may be the one they want to lean into rather than going to like a more generic program. But I think first and foremost, in my experience, it has been accelerators provide emotional support, mental support that founders need. It's extremely lonely being a founder. So just being around other people who are pursuing something that they're trying to accomplish, just that camaraderie alone can be extremely helpful. And then, this sounds somewhat counterintuitive, but my favorite thing about running an accelerator program has been helping founders figure out what to stop doing. So I think so many people think all I need is an idea and I'll go into an accelerator and they'll propel me forward and I'll become successful or whatever. But a lot of the times the greatest value of the accelerator program is helping you refine your idea or completely stop pursuing the idea you're after because the timing's not right or the market's not there or there's some other thing that is preventing you from achieving your vision.
That's a good point. I think founders might have something in their mind of what they want to do or how they see their product existing. And if an accelerator can kind of honestly tear down your veil a little bit, because you as a founder, we kind of have to be drugged back into reality sometimes,
Sure.
like you need
Yeah.
that. And it's no one better to do it than somebody who runs an accelerator who does this for a living. Like that makes sense to me. Now, from your perspective, what are some of the cons of joining an accelerator?
Sure. And I think one of them is that the definition of what an accelerator is or does is not like a set kind of definition. Like any number of programs can describe what they're doing as an accelerator when it might not actually be giving you your expectation of what an accelerator is. So I think the biggest con is just confusion. Like I said earlier, not every program is the same. They all have their strengths and benefits. They also have kind of different conceptual learning styles. So if you're a founder who's like if you're a founder who doesn't like curriculum or doesn't like learning things in a methodical way, then going to an accelerator program that has a very specific or set curriculum is not going to be helpful to you. In fact, it's probably going to be more frustrating. And the converse is also true. If you're somebody who needs that kind of like scheduled learning engagement to get you through what you need to go through, and the accelerator, like our program, was very, very loose, no set curriculum. We kind of met every founder in the cohort where they were and helped them with their particular unique problem set on a one-on-one kind of basis. Like if you're looking for a more group learning, kind of scheduled environment, our accelerator would have been horrible for you because you would have been totally frustrated by the format that we used.
So yours was just like kind of all over the place.
It was by design. When we started it, we had a set curriculum where we were like, look, founders need to understand all of these things. And this is kind of the right path to learn all of those things. And what we discovered a couple weeks into it was like most founders can't deal with that form of structure given what they're trying to do. We'd have founders who would come to us 2 weeks after a segment that clearly addressed the problem they were having now, and they had just ignored it 2 weeks ago because that wasn't their problem right then. And so like it was really an ineffective way of delivering the knowledge that we wanted to deliver. So we decided to shift it to be very much, let's just deal with the founder and what they're going through and give them access to the knowledge they need, not only when they need it, but more importantly, when they're ready to hear it. Because you can tell a founder, you're going to encounter this problem. This is going to be hard. Get ready. This is going to be bad. And until they go through it and really start experiencing it, they're not really ready to receive that feedback or guidance.
That makes sense. Okay. So if you're that founder specific from what it sounds like, how do you choose the founders that apply to your accelerator? Because that's not the typical strategy I see. I see a lot of accelerators that kind of, I won't say accept anybody, but almost anybody that has money. Like our fee is $10K, and if you can pay $10K, we'll accept you. I see that a lot.
Yeah. And that is one of the challenges of the kind of accelerator ecosystem is like some accelerators charge you, many will take equity in exchange for some capital that they invest into the company. So that's a whole another thing to pay attention to. It's like, again, like college, most accelerators, you get out of an accelerator what you put into it. So like if you have the time to invest, if you're willing to kind of, engage with the program in the way the program is designed to work, then you're likely going to get something out of it. But the way we dealt with our program was we didn't charge tuition. Initially, we invested and took a little bit of equity, but we discovered that was even a bit of a flawed model. And so we eventually evolved into it's free and clear for the founder. We don't take equity. We don't charge tuition. We just look for other ways to finance that program through sponsors and grants to help us deliver those services to founders. So to founders, it's basically free of charge.
Man, that is convenient. I think that's very a noble approach, because I find that the equity model is probably the one I see the most. It's like the most popular. I guess it kind of makes sense from a perspective if you as the expert, this is what you do. If you're helping them with connections in the industry, connections in their specific industry with go to market and legal and all the different things, banking, I could see how a couple is on the equity side. It's not that horrible of a deal all the time.
Right. Yeah, it's up to the founder. Really, it's always the, do you want to go it alone and own 100% of the business you're building, or do you want to use equity to purchase the help and support you need in order to build likely a larger and more compelling company? But there's no right way to go about it. It always comes down to the founder and what they'd like to do.
Okay, so let's just kind of look at it this way. Are there reasons why founders should not join an accelerator?
Yeah, great question. I think by and large, most accelerator programs are compelling for a first-time founder. Like I don't know that like a serial founder, like somebody who's built a business or two, would necessarily get as much value out of them. So if you're a second or third time founder, then that might be a reason you wouldn't join an accelerator. Again, I think if it's at a very busy time for your company and you really need to be heads down, focusing on specific aspects of building your business, that might not be the right time for you to explore an accelerator, because there's some give and take there in terms of your time and engagement. And if that's going to derail your company, that's not a good time to do it. I think if you have co-founders, if you and your co-founders are not in agreement about going through an accelerator program, that's a good time not to choose an accelerator. You have to be all in, because it's very much divide and conquer in terms of like getting all the things done that an accelerator expects you to do. And I think, honestly, if your only objective is to go through an accelerator program on the path to raising capital and you're not going to take advantage of anything else the accelerator has to offer, then it's probably not time well spent for you.
That would just be a waste of time. And that's kind of leads me to my next question I had, which is like, what are the benefits that an accelerator provides? Like, we can use you for example. What are the clear things that when a founder comes to you, you tell them, here are the benefits of joining this accelerator. This is why you should work with us.
Yeah, for sure. So for us, it's very much, I'm in Portland, Oregon. For folks don't know where that is, it's kind of halfway between Seattle and the Bay Area on the west coast of the United States. And so we wind up with a lot of founders who are first-time founders who are very much pursuing a product idea. And so a lot of our focus with these first-time founders tends to be around, are you looking to build a business, or do you simply want that product to exist? Because those are two very different pursuits. And the way we kind of put a finer point on that is we're like, if you have to kill this product in order for your business to survive, are you willing to do that? And that can be a very hard question for some people. Some people simply want a product or solution to be in the world and be available. So that kind of interrogation is the work that we do in helping people kind of refine their concept and what they're actually trying to accomplish. And then I think the other thing we do very well is help with the storytelling around the company you're building. So not just your typical, like, here's how you pitch to investors or here's how you participate in a pitch competition, but what are the foundational elements of that story and how they work, so it enables you to tell the right story at the right time to the right people.
Right story at the right time to the right people. I like the way you set that up. I like that. So in your mind, how do I want to ask this one? This is why I like not, I have a good question and I want to ask, but this is why I like doing recorded shows, so I can like fix the edit and that like, after.
I do it all the time. Yeah.
I want to get to like the process with you. How long is your program flowing? Are you only accepting people in the Portland area? Is like a national thing virtually? Like, how does your accelerator particularly work?
Well, we're having this conversation in an interesting time because we're really in this transitional period right now. So I can describe the way our accelerator used to run, and I'm happy to talk about why we decided to press pause on that. But the way it used to run was a cohort-based experience. So we bring in 10 to 12 companies. They'd be in the program for 3 to 4 months. We had a shared workspace, so everybody was expected to be there and work out of that space. We didn't require you to be from Portland or from Oregon, but you had to be willing to relocate to Portland for 3 months to participate in the program. We would generally get applications from all over the world. I used to joke that, we've received applications from every continent except Antarctica, and I'm still trying to get one of those. So, we would get them from all over the place, but we were also very early. Like when we initially started our program, it really was Y Combinator, Techstars 500, plug and play, and then us. I mean, there weren't a lot of other programs running at the time, so that kind of helped us with deal flow and those kind of things. And then the structure of the program was kind of carved into 3 parts. It was the first third of it, we really focused on product and just building, like build what it is you're going to build, get it to at least prototype phase or somewhere where we could put it in front of somebody, start putting it in front of potential end users, and then work on the second part, which is like pricing projections kind of stuff, like what kind of money potential does this have? Are you going to be able to bootstrap this, generate revenue? Are you going to need to raise capital? Like those kind of things. And then the third part was really that pitch storytelling kind of work. So the last, 6 weeks of the class were just purely focused on pitching, practicing that pitch, refining that pitch, figuring out different ways to tell the story, figuring out what resonated with folks, all those kind of things. So it was very much a series of iterations in each of those components, but we tried to ensure that every founder who went through the program got to focus on those three things.
Yeah, I think that's such a good foundation because it covers the main things that founders have problems with. And one of my other questions was about the demo day. What happens after demo day? Because every accelerator has this big event and everybody shows up and they're dressed up and pictures and stuff. And I think it feels good. But founders described it to me as your momentum is up here on demo day in an accelerator. And once it's done, it's like your momentum just falls off a cliff.
Yeah.
And you can become super stagnant.
Totally. It's very much like the old cartoons where, Wile E. Coyote runs off the cliff and he's hanging out in midair for a second and then he falls. That's what it feels like for a lot of startups moving out of an accelerator program. For us, we were lucky that, we maintained a space throughout the year. So our, day after demo day, our founders generally came back into the space, kept working on their startup. We kept helping them with mentorship and that kind of stuff. And even some of them, if it made sense, would stay in the space as we brought in a new cohort of startups and they would serve as mentors in residence. They'd be like, make sure and you talk to this mentor, or you don't want to miss this part when the program's going through this, or don't pay attention to Rick, he's just blowing smoke right now. They were playing that role for us as well. But then, I'm still working with founders who went through our program 10 years ago. They still reach out and look for advice. And, that's what we're here to do. It's very much like any other educational institution that has alums and seeks to help those alums through the rest of their experience. That was the way we structured it. And all of our founders made a commitment to, whether they were in the space or not, continuing on as mentors for our program. So they would come back and mentor another group of startups. But that was our format. Not every accelerator has the luxury of doing that. Some of them are running so many programs that doesn't make sense, or they only have access to their space for a short period of time. So we were really lucky that we had access to those assets and were able to use them over time.
So how often are you focusing on helping the founders that were a part of the accelerator go and raise? Do you have the Rolodex of investors? Are you only talking to investors after they finish the cohort? How does your accelerator work in that regard of helping founders get funded?
Yeah, sometimes, again, sometimes it's telling them what not to do or what they're not well positioned to do. Some people aren't building venture scale startups, when it comes right down to it. They may be a compelling founder working on a compelling idea, but by the time we get partway through, we're like, look, you're not thinking about this at the right scale. This is not going to be intriguing to a VC, so you might as well figure out a path to revenue and continue to grow from there. For some folks, they'd already raised by the time they came through the program. So I think, this won't sound like much to people today in a world where people are raising, billions of dollars in a seed round. But
before this interview, I promise you, I just saw somebody tweet about a $457 million seed round.
I saw that one. Yeah.
It's absurd.
Mm-hmm.
I don't know how we got here, but it sounds crazy.
It is crazy. Yeah. So without that context, we had a company that had already raised $3 million and we're up to 5 or 6 people, but the program had aspects to it that was compelling to them. So that's why they decided to go through the program. And then, there are some folks where it's really they just don't understand venture capital at all. They've grown up watching Shark Tank or whatever, and they're like, oh, this is how it works. And it's like, no, that's not how it works at all. So a lot of it is that let's teach you how VC works, what VCs are motivated by, and how VCs are deemed to be successful. And let's help you figure out if that's something you want to pursue. And if you do, and your company's the right shape and it's the right scale and all those kind of things, sure, we're happy to help make those connections like whenever it seems viable. That could be 2 weeks into a class. It could be 3 years after a class is over. But like, we want to make sure that they're going into that situation with their eyes open and that they're not like getting themselves in trouble by exploring that too early.
I 100% agree. I think that a lot of founders want the venture capital. They want to work with angel investors, but they have no knowledge on it. It's like no man's land. And then that's a way to either get turned away easily or get taken advantage of because you just don't know. And sometimes you don't know what you don't know, so you don't even know how bad what you're doing is. Oh, yeah. It can be very frustrating, I bet, for a lot of founders who are raising. Okay, I'm not keeping you forever. I just got a few more questions.
Sure, no worries.
And so for the founders that are listening who might want to join an accelerator, what's one thing you think they just have to know about it?
I mean, I think the one thing that they have to know is, and it's very similar to the misconception about venture capital. I think a prevailing misconception about venture capital is it's a VC's job to write checks. And that is not at all what a VC is working to do. So a VC is working to make their LPs money so that they can go raise another fund based on that success. And for an accelerator, I think it's very important that founders understand that regardless of the program you choose, it is not the accelerator's job to do work for you. They will not be taking work off of your plate. If anything, they will be adding more work to your plate, but they're doing it to like make stuff happen more quickly for you.
Progress.
Which is why they're called an accelerator. They're supposed to like move you further faster than you could go yourself. But that doesn't mean, like, I often get the question, will you help me find a co-founder? No, we're not going to do, that's not the work we do. Like, you need to do the work. You need to engage in making things happen, but we're going to set stuff up for you so that you can knock it down and get that work done.
Okay, that makes sense. Okay, I like the breakdown. I think this is going to help a lot of founders who are on the fence if they want to work with an accelerator. So let me ask you this. As somebody who runs the accelerator, who runs the companies, you've probably seen a ton of companies come through over the years. Were there some that you had a chance to work with and you didn't, and you like regret it? Because I think a lot of investors, operators aren't always honest about that.
Yeah, for sure. I mean, I think we all, whether they're transparent about it or not, everybody has their kind of anti-portfolio where it's like, oh, these are the folks we talked to and we either didn't see it or we didn't realize that the market was going to shift that quickly, or like we just missed an opportunity. You know, I have a handful of those in mind for our kind of anti-portfolio. A company called Globe Sherpa that just didn't feel like the right fit for us when we were talking to them, and they went on to successfully exit to Daimler, and like they were a compelling startup, and I'm a huge fan of what they were able to build, but we didn't think it was a good fit for us at the time. We had another company that was like too small and early for one cohort, and by the time we got to the next cohort, they were too big and too far along. And so like sometimes it's our timing that's off, and we can't help that. But yeah, I have a ton of companies in town where, you know, for the most part, we're still on good terms. Like the founders will still rib me about like, yeah, you missed out on us. We had it and you didn't even see it. But like, you know, I think that's always going to happen. And to think that you're going to hit every single company right on, that's kind of false for anyone.
Man, Rick, I appreciate you breaking all of this down. I think there are a lot of founders out there who might be able to make an easier decision on joining an accelerator or not. What is, you know, one last piece of advice or insight you can give to founders as you've seen so many companies you just said, specifically when it comes to their idea? Like, what's one piece of advice on their idea? Is it testing their idea? How to know if it's bad? What's your advice on that?
Yeah, my advice is don't be too precious with your idea. I think so many founders are afraid to share their idea because they're worried it's going to be stolen. They don't want to show it to people because they don't feel like it's ready. They're not socializing it as much or as quickly as they should. So to me, it's like, get your idea out in front of as many people as you possibly can, as quickly as you possibly can. And then once you're receiving that feedback, kind of the part two of that advice is, it's hard, and I don't even do a good job of it, but my advice is, a yes is just a data point and a no is just a data point. So don't think of a no as a negative. Don't think of a yes as positive. Just think of those as data points to help guide where your product should be going.
Now that insight I like that, because I don't think you get too big on any of it. You don't want to get too high or too low, because I think the mental side of being a founder, if you throw that off, it's hard to get that edge back and you're just off balance kind of forever. Man, Rick, thank you so much for being here on the show, being such a great guest. This was great.
Of course. Happy to do it. Thanks for having me.
So now, one last thing. So now is the Accelerator going virtual now? Now you're going to be all online?
Good question. So what happened, as I mentioned, we were designed around having a shared workspace with founders. So obviously we all went through 3 or 4 years where that was not an option because people weren't sitting in offices. And what we discovered was it doesn't really function terribly well as a virtual program. And then another thing we discovered as we were shifting into this era of AI is that it's never easy to build product, but founders are getting to product or prototype much more rapidly than they ever have before in history. And what that means is that they often don't have the same depth of learning as they would have had in the old days while they're learning all that stuff while they're building product. So we were winding up encountering founders who had needed more education than we could provide in a 3-month period. And so it just dawned on us that the program wasn't delivering the value we wanted it to deliver.
Okay.
So we just pressed pause. We kind of went back to R&D, customer discovery, and tried to figure out what to do next. And we're looking at a new kind of programming that is, I don't want it to be virtual. I think we need some in-person stuff, but I don't think people need to work side by side every single day of the week. So we're just trying to figure out a way to structure the program in a way that delivers value to the founders in a meaningful way, given the new world we live in post-pandemic with AI.
That makes sense. That makes sense, especially on the part about like them not getting as much value because it's virtual. I can imagine people having their computers open and doing all kind of other stuff, and they're not really focused on what you're saying. It's just playing in the background. Mm-hmm. I do that all the time. So I know online classes, I would do the same thing. Like, totally. Honestly.
Yeah. Well, and a lot of it, like, I always knew the space was valuable, but it really just came into sharp relief, like how many like random collisions or like accidental mentoring opportunities occurred just because people were cohabiting within the same space. You know, like somebody would be meeting with a VC, and because that VC was meeting with them at the accelerator, that VC would get to meet all the other companies. In things like that would occur kind of organically, and in a virtual environment we just completely lost those opportunities.
Man, I get it. I totally understand. So if the founders are listening, want to take action, they want to work with you, can they hit you up on LinkedIn?
Totally. Yeah, I'm always happy to talk to founders, even if we're not actively running programming right now. Always happy to help with that stuff. And then, you know, I did this work. We built we call it the pie cookbook, because if you have a company named Pie, everything becomes a bad pie pun. But like the pie cookbook, we designed to open source all of our learning about how an accelerator program should be conceived and built and run. While we built that for people who want to build their own accelerators, that can also be really good reading for founders who are thinking about going through an accelerator program to help them figure out what kind of program might be right for them. So it's a repo on GitHub. It's pretty easy to find, but hopefully that's helpful to founders who are trying to make those decisions as well.
All right, Rick, thank you so much for being here and being such an amazing guest.
Happy to do it. Thanks for having me.